All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for the middle of the month on the 16th of August. I have a couple things I want to go over with you, but first of all, I want you to take a look at the SPAC market. And if we can just read this really quickly, millennials lost millions on Bill Ackman's SPAC implosion. And we're only talking about roughly 600 million. So imagine how many people, if we lost $600 million, that would be what? 600,000 people that each maybe put $1 million in that just lost $1 million. High profile fund manager Bill Ackman wound up scorching retail investors when a special purpose acquisition company, Pershing Square Tortine Holdings, failed to find a merge partner after millions of bluster from Ackman and blind faith from advisors. The failure of PSTH to get off the ground resulted in large losses for retail investors. Like one 35-year-old unmarried Chicago psychiatrist, he lost nearly $1 million investing in call options on the pre-merger entity. PDH have been touted by Ackman as investor-friendly SPAC. Investment even tweeted a rap video about SPAC mining money in February 2021. Ackman even joined about marrying a unicorn when talking about his SPAC's launch last July. Anyone have any idea, even though you're supposed to give back all the money, anyone have any idea what the loss was for this roughly 3-year SPAC? How much did people lose? Because again, if you don't get acquired, you're supposed to get your money back. Anyone take a guess? Anyone take a guess? How much do you think they lost in their SPAC? And this is going to go along with what I'm going to say about, okay, Randy, you just said 100%. You're supposed to get back your money, so you shouldn't go through 100% in almost a 3-year period of time. But anyone else, someone type in, how much do you think this SPAC lost when we're talking about Bill Ackman's $600 million SPAC? 50%. Not a bad guess, Mary. Anyone else? You guys are quiet today. From everything I saw, it looked like about 30%. So if you had your money with Bill Ackman in this unicorn investor-friendly SPAC, you basically lost 30% if you're in it from the start. Kind of a bummer when you look at the last couple of years of the stock market. It's like 38% difference between the gains. What a rough way to lose your money. So when you're talking about SPACs, you'd need to pay attention to what really is happening and the risk that's involved, because apparently they're on average almost 10% a year charges on this SPAC, and that money doesn't get returned. The fund money does not get returned. So today in portfolios, we did some work, and someone just typed something in. Let me see what they said. I would prefer to lose money because it means I had a lot more to spend. ADP, I'd agree with you. Than just sticking it somewhere, hoping something happens. I agree. So in portfolios, we did some work. We added long puts to Under Armour, Bank of America, and Baidu. So that's what we were looking at. Some people ask, Kevin, why? Well, let's start with the first one. Let's start with Baidu. Baidu's breaking an impressive long-term support level at 150. So when we're looking, actually, let me go to a better chart. I'm going to pull Baidu out 10 years. I'm going to try to pull it out 10 years. And Baidu is the 2013-14, 2015 $150 level, which says our expectation is it literally could go all the way back down to 100. So we added long puts out to October so that Baidu can start making more money on the way down than the stock is losing. Puts made 270. We also have 157 puts that made $5 today. We have 165 puts that made $5.66. Today we ended up making more money on the way down than Baidu lost. That is what we're looking for in regards to adding extra protection. Pretty neat to be in a position where our original puts are doing quite well. We have some at 157.50, some at 165. We got another group. Where's our other group? 157.50, 157.50 right here. And then we got another set added today at 150. Our expectation is we're going to be in good shape as Baidu continues to peter on down to the 100 level, which it most likely will do in the near future. Taking a quick look at Bank of America. Kevin, Bank of America did not exactly help us today. In fact, we lost a little bit of money on it. Yes, we did. Kevin, why would you protect Bank of America? If we pull up a chart, you might look at me and say, Kevin, I'm not sure you can justify on the chart why you're protecting Bank of America. And no, other than the fact it really can't get above 42.50, there is a reason we are protecting Bank of America. That comes down to doing our due diligence and seeing that this week we have FOMC minutes on Wednesday. And what was leaked out today and over the weekend is that in September, we're going to start to see bond tapering in the market. And when that bond tapering in the market occurs, we will probably have a similar taper tantrum like we had before. And that started with news before we truly even hit the tapering. So we're being a little preemptive in the taper tantrum that we're expected to hear their idea of tapering in September on their bond purchases, which is $100 billion. I'm going to explain what the Fed's trying to do. So we're being preemptive in a taper tantrum that we should have Wednesday at 2 o'clock Eastern Standard Time when we read the FOMC minutes. And then last but not least, we added Under Armour October 25 long puts. Some of you are going to go, boy, Under Armour had a fabulous earnings. And I agree. But it just doesn't seem to get above 26. Last time it was up there for a day, it dropped all the way down to 19. That was also done on good earnings in May. This week we have quite a bit of the retail sales numbers that come out tomorrow, the retail stores that come out, a little bit tomorrow, a little bit on Wednesday. Thursday is a huge day for retail sales. So we're being a little preemptive in those regards. We almost protected today Boeing. Technically it crossed up, but it came back up and bounced off of the 200-day. We also have a pivot point down there at 224.36. We have the 200-day at 225.66. We waited on Boeing for an extra day. Ford literally is in no man's land, but it seems to be holding that 1350 quite well. We gave Ford an extra day. JP Morgan is still holding the 157.50. We might protect JP Morgan for the taper tantrum, but it held the pivot point today. We have a doji after going down, which means we should see it bounce back up. We will take this under consideration and watch JP Morgan here in the near future. Interesting conversation with Keith and I as we were looking at our positions and going over the recap from last week. Record high closing for materials, consumer staples, and financial sectors. S&P's up 19% this year. Energy slipped. Again, everything just shows us one more time that we're in a monetary crisis, which is interesting because what the government is trying to do is the infinite banking concept, where you become your own broker. I will put this link in here. I'm not a big fan of the concept because it's an insurance theme, but I will put the link in here for the infinite banking concept. And the problem with the infinite banking concept means that you become your own banker. So you loan your money out to your company, you charge your company interest, then your company pays you for the use of your money. Your company can write off the interest if it's an LLC, an S Corp, a C Corp. You get to recoup the interest as it goes back into your personal checking account. It's a process that you should be able to net that 3 to 4 to maybe 7%. The problem with the infinite banking concept is that you have to have that money up front. And with money being cheap right now, I would much rather take a loan out of my house for $575,000. I'd rather take that loan out for myself, do a 20-year, pay 2 3/8% for it, then not have that money available to be in the market. We just bought a new Ford Expedition. I'd much rather pay a 2% interest rate than go fork up that money up front. They talk about using your life insurance and borrowing from your life insurance. What typically happens is you do that into some investment, right? Into your home, you borrow from your life insurance. And again, the problem relates to just exactly what we see with a financial plan. That number is an average that they calculate into your wholesale life insurance policy. And when you borrow from your life insurance, there is a call mechanism, just like a loan call, where they can call your loans due. What typically happens is you borrow the money, you go spend it on a house, the stock market has a real crappy year, your loan to value for your life insurance is upside down by 30%, only allow 10%. So you've got to come up with 20% of a $575,000 loan. I mean, it's not too bad. It's only 115 grand that you've got to come up. Otherwise, you make your policy and you no longer have a policy. You now owe credit card type rates on the money you borrowed, in which case you either lose your house or you keep your house. You're now paying 14, 15, 16, 17% interest rates as you pay back the money that you borrowed from your insurance. It is a fool's game. Yet here we have our United States government printing money up the wazoo, buying our own debt, paying ourselves our own interest, thinking we're going to be in good shape in the long run. It just makes absolutely no sense to me on why people would think that way. The infinite banking concept, this is the concept that is currently bankrupting the United States of America and is the reason we will lose our reserve currency status. And it's just a matter of time. We already had our Moody's downgraded the US at one point in time to AA. Don't think it can't happen because it currently is happening. And this is the problem that we're seeing in our government right now. It's not Republican, it's not Democrat. It is a politician problem that for all these years we have the ability to get ahead like Apple, and we spent through the nose and we haven't had a balanced budget in forever. Well, Clinton balanced the budget. No, he bankrupted Social Security to pay down the budget. He did not balance our budget. That is not correct. I found something very else interesting. We have some new worries in the world economy. Higher COVID and the U.S. withdrawal from Afghanistan. I know I didn't spell that right, but watch this. This is what I love about spell check. Who would have thought all of a sudden we would scare the world in allowing ISIS to take over Afghanistan like we've done. A couple calls came into me today. Kevin, how bad can this get? Well, I'm not really sure. Some could tell you that last time we had this problem, the Twin Towers fell down. Well, was that Al Qaeda or was that ISIS? It doesn't matter. In my opinion, the world is taking a hiccup today because we have done such a poor job of exiting the Middle East. In all that 20 years, we're flushing down the toilets. And it's unbelievable because we had the United Nations calling for neighboring countries to not send back the refugees. Yet at the same time, we have Europe, primarily England, that's saying they're no longer accepting refugees. They've got too many over there. And I just find it a little hypocritical. And I'm calling it hypocritical on our part as the U.S. as well, that we're in this situation. But that started the downward movement this morning in futures. Nice to see that we recovered. Earnings targets coming up on the 19th. That's actually I got on the 18th, excuse me, which is this Wednesday. Where are markets ending? I'm going to say higher. We're going to follow the trend higher as it goes up. Still bullish on the Dow Jones. Still bullish, but almost overbought on the S&P 500. Still bullish and have room to grow on the NASDAQ. If you're to look at these three and look for the dog, it's the NASDAQ. But in all reality, the NASDAQ has the highest current opportunity to move higher than the other three indexes. Change my belief where we end August. Instead of doing a 0%, I'm going to go with a 1% growth. Earnings this week, going on Tuesday, Walmart's a big one. Home Depot's a big one. Wednesday, TJ Maxx, Lowe's, Cisco will be a big one. Thursday, we have a slew of retail. BJ's, EL is Eli Lilly, Kohler's, Macy's, Nettie's, Tapestry, AMAT, Ross Stores, Deere on Friday. Really this week we're going to be driven by economic reports, retail sales, industrial production, capitalization, business inventories tomorrow, FOMC minutes with housing starts and building permits on Wednesday, initial claims and leading indicators on Thursday. No economic reports on Friday, just the monthly options expires. So I should say monthly options expiration. Internationally, it was really China today. If you took a quick peek at what was happening in regards to world economics was all about China this morning, and it was they blew out some numbers and they did horribly bad on others. That's the best way to say it. All right. Cramer thinks some stocks are bargains in the market at record highs. He believes Ford's a bargain, PayPal, Norton LifeLock, American Eagle Outfitters. I would change American Eagle Outfitters for Under Armour. PayPal, I would, with their changing that they're doing, I would probably say Visa. Boeing, Pioneer Natural Resources, or Devon Energy. Pretty neat to see Boeing and Ford part of his, hey, if you can find more money and put it to work, this is where he would look to put more money to work. Disney, amazing earnings last week. Disney subscriber base is 116 million and still not moving overseas yet with the growth there like they think they're supposed to. Across Disney Plus, ESPN, and Hulu, they've got 174 million subscribers. Pretty amazing when you look at their earnings. All they've done is went from what? They went from 190 after hours to go back down to be at what, 170 today? Let me take a quick peek. To move on back down to 178.90. You have a, 179.09. You have a great opportunity to be getting into a heck of a deal on Disney right now. But a good opportunity to take a peek and look at some of their numbers that they've hit and where they're at. Here are their numbers, so I can go through those if you so choose to. Again, doing a pretty good job. Another 3.9 million people quit their jobs in June, and many are getting higher paying roles. So I put this in. It's a little bit old, but there might be a shift of people quitting jobs looking for higher paying jobs, which means you should be able to see housing numbers rising again, even though in my area they're ridiculously high. Expect to see housing sales rise and the value of houses go higher as people are biting the bullet, moving for better paying jobs, and looking for homes to live in those areas. With that said, can anyone guess what's taking a huge hit? What industry right now, other than the housing industry, is taking a significant hit and looks absolutely awful? Come on, someone throw a guess in there. Oil. Oil is not looking great, but there's another one that's looking even worse. And I found it pretty interesting because COVID is hurting yet again. COVID is hurting. It's hurting the airlines. The airlines is taking a beating. And the numbers were awful most recently. COVID is keeping people out of the airlines yet again. And those airline stocks are starting to take a beating because of it. So be careful, those of you that were airlines. People asked me earlier, well, shouldn't we have gotten in a couple months ago? The numbers were trending. The numbers were not trending enough for me to be impressed to start to jump on the airlines. I had a website that for whatever reason I can't find right now, but airline numbers and travel numbers are starting to go back down. So I'm not a big fan of airlines yet. I was waiting to see if things got a little bit better, and it seems to be that was a good idea to wait a little bit longer before jumping into airlines. All right, let's see what else we have. I've got one more, Walt Disney Stellar Development. So if you want to see where Disney's heading to, I have that in here. But with that said, what questions do you guys have for me today that I can answer for you? What questions do you guys have that I could hopefully answer, shed some light on some things that I was looking at that maybe might be able to be helpful for you, or some questions in general on something I haven't mentioned today that I could throw some light to. Here we go. Why has Roku fallen from 415 to 356? I think Roku was a COVID, hey, we want something that can watch different platforms via the internet. I also think we had people that were making a big switch from cable to Roku and buying individual plans like local stations or Disney Plus or Netflix, or more importantly, YouTube came out with a package. YouTube, well, again, the short answer is probably a COVID fad that people were running to, that now that we're back out and about, we're not spending as much time in front of our TVs. So Roku has not had the numbers or the sale of their boxes like they've had in previous quarters last year. They'll have really hard comps going into this year's growth because of last year's growth. They probably will not be able to match the growth rates from last year where people were locked up inside. So that would be my expectation on Roku. In fact, let me take a quick look. I am looking at finviz.com. Taking a quick look at these guys. Broke support, broke their pattern. I would have looked for some downgrades, but you don't see it. You don't see the downgrades. Interesting to see where they're at. Their debt's good. Yeah, I think we're just seeing a new trend on what's happening with Roku. So pretty interesting. Don't hesitate to look at some of the news that's here on FinViz. Gives you a great idea on where it's at. Roku stock has faltered with competition. So there's a lot here to look at, to pay attention to. Kevin, when did you explain your strategy with Leaps? I want to revisit it. Abraham, let me look into it. I'm not sure. I don't have it on hand, so let me look to find where I spoke about Leaps. And really, my favorite part of Leaps is taking some stock ownership and taking a profit, and then taking about a quarter to a third of that into Leap positions. So even if I dollar cost average it once or twice, if it drops by 50%, I'm in good shape. If you're primarily talking about, what am I trying to say? If you're primarily talking about the current Baidu ones, the neat thing is the 240s and 250s have been 100% paid for with short calls. So that's the beauty of doing what we do. I'll look for it and I'll try to send you a link. Are there any other questions that I can answer for you guys? If not, I appreciate you guys being here. I'm playing Mr. Dad this week as kids are starting school. So I'm stuck to my computer at home and getting kids to work. Appreciate you guys being here. I'm pretty sure, I think I'm doing tomorrow's trade findings and adjustments. So guys, have a good evening. I'll talk to you tomorrow. Good night.